Gang, it's an exciting Sunday morning. We have Patrick Stadum from American Federal Bank joining us. All things mortgages. Good morning, bro. How are you?
Great. Good to be here. Appreciate you having me on, Eric.
You got it. You're coming off of a cold. How you doing? Are you surviving?
Bouncing back. My throat's a little dry, but I think we'll get through it.
All right, I'm going to get a bracelet that says Patrick Strong because I want you to get through this cold, buddy.
I'm excited too. Let's get through it.
Hey, we're going to talk about mortgages, but I want to talk first about you. Where are you from? What's important to you? And how'd you end up selling people money?
Yeah, I'm originally from Rugby, North Dakota. It's the geographical center of the world, we joke, but in North America. From there, went to college at UND.
Hey, we all make mistakes. That's cool.
Yeah, exactly. Yeah, I ended up
UND
in
is
Fargo,
a fantastic school. I say that, of course, as a Bison alum.
Yeah, it was a great time. Sorry for last Saturday.
Yeah, no, it hurts. Sure. It hurts.
But yeah, went to 4 years at UND, studied finance there. Right out of college, kind of got swooped up by American Federal. They picked me up, got me in the banking industry and the sales side of it. So it's going well.
Let's talk about rugby for a minute. I was a Camp Metagoshi kid growing up, which is, of course, an hour or less from rugby.
Yep.
And there was a girl that I was at camp with, and she and her family were dairy farmers. And so we became good friends. And the first time I ever milked a cow was in Rugby, North Dakota.
Oh, really?
Yeah.
I had a buddy that...
When you have a crush on a girl, you would do a lot of things.
Yeah, no
and
kidding,
milking a cow was one of them.
Right.
Yeah.
I had a buddy that owned a turkey farm, so I worked on a turkey farm in Rugby, North Dakota.
That sounds like the worst job on earth.
Just about. It's the worst smell I about can imagine.
Okay, I picture the Napoleon Dynamite scene where they're chicken farmers, and it sounds horrible, and it is horrible.
That's spot on.
So thank goodness that now you've grown and transitioned just a little bit, and as you've grown and transitioned, you're now in the mortgage business. What do people need to know about the mortgage business? Because it feels like it's this thing that is, I don't know, it's set up as a bank extension, but it's a necessary piece for people that are going in. So how do you explain what you do to the average Joe?
The thing I start with is talking about education with people, and you sit down with someone, and for me, it's, if you're looking to buy a home and you're looking to get into something like that, sit down with a banker and a little bit of education right away. Let them know what they're getting into and the ins and outs of it. There's so much right now that people they don't understand about it. So you try and kind of clue them in on what they're looking at with rates and what, an escrow account is and some of those things, and make sure they understand what they're getting into.
Yeah. I had my first mortgage when I was 21. My mom passed away. I inherited a townhouse, and I learned about mortgages pretty early on. And I thought, well, there's your mortgage. That's no big deal. You're paying the principal and interest. But then there was like insurance and taxes and specials, and I thought, well, this sucks, right? I'd imagine that for you, Patrick, a lot of people come maybe with misconceptions about mortgages. So what are some of the misconceptions that people have?
Yeah, I think the biggest one is probably down payment, closing costs. How much money it takes to actually get yourself into that home. There is a difference between down payment and closing costs. Down payment is what you're putting down on the house. Closing costs are what you're paying for all of your services, as far as title work, appraisal, what you're paying the bank, prepaying some taxes and insurance. So understanding how much money you got to come in with, right?
Yeah.
Like most people just don't really have a grasp on that.
People think they need 20% down on a house. Do you need 20% down?
Absolutely not. Most people nowadays are not going to have 20%. We understand that. Even just through conventional mortgages, you can get as little as 3% down. And people need to know that, because I've worked with people that are, I'm waiting till I have 20%, and what do I do until then? Well, you can get in before 20%. There's maybe some cost to it, but
of course.
Yeah.
Of course. So we could go back and give a whole history of why now there is a cost when you don't have 20% down, and it's because of the Big Short. It was the crash that happened in 2007, and so now banks have to secure themselves a lot more, and yet houses are more affordable right now than they have been maybe ever, and that's because of interest rates. What's happened with interest rates the last couple of years?
Interest rates have drastically gone down. If you go back to about February, March of last year, I looked at some numbers. I think 2018, the average mortgage was 30-year mortgage was 4.5%,
which is a great mortgage rate.
And that's not a bad mortgage rate. Historically, you go back and you can get into double-digit mortgage rates. So right now, you get into
there's the early 80s. I always have some friends who will be like, I remember when I had an 18% interest rate in 1983, and that was real life.
Oh, yeah. And try to wrap your head around that is just unreal. But yeah, now 4.5%, and people they're scoffing at it. They're upset about it because of today. I think 2.875.
Yeah. Well, every day changes, and so we don't want to lock it in depending on if you're watching a video recording or listening live or whatever it may be. But under 3%, rates have dropped, and rates have dropped because the government is intentionally trying to stimulate the housing economy. Is that an accurate statement?
Yeah, I would say absolutely.
Okay, and so the look and the desire is as the economy strengthens, interest rates will go up. Yes?
Likely, and I think you might start to see it soon. I don't want to say soon, but recently we've seen them starting to go up a little bit, just bouncing, starting to go up, but you keep an eye and see what happens.
So let me make this declaration. I think that real estate is one of those things that everybody cares about, because if you don't own a home, you kind of want to own a home. If you own a home, you kind of want a different house, or you want to refinance yours. And so it's a topic that matters for a lot of people, just like money matters to a lot of people. It's one of those things. What would you say to somebody who is currently a homeowner and they're debating, do I refinance or do I buy new? What would you give them as advice as a mortgage lender?
Yeah, advice, I guess.
And I'm okay with whatever you say here. Like, I'm not going to kick you off if you say refi.
Probably refinance. I guess if you're looking at that situation, it's easier to refinance just with all the documentation.
Yeah, that's the wrong answer. I'm sorry, Patrick. No.
No, and refinancing, buying, whichever, it's trying to find the right spot there, what makes most sense for the person. But if you're refinancing, look at your current rate and see what's going on there.
Yeah. Last year, 2020 was the year of refinancing. If you own a house right now and you haven't refinanced since 2018, if you're at any rate over 4%, you need to consider refinancing.
Absolutely.
And I will tell you this also, is that you should also consider, because affordability is so low. Yes, prices are appreciating. We're not on that big crazy roller coaster that other people are on. We're seeing a slow and steady appreciation. Under 6% is how much houses have appreciated in the last year, despite the chaos. I think that right now, Patrick, if somebody is interested in real estate, they should either look to buy or to refinance. But sitting idle in the property that you're with and the mortgage that you have and not doing anything on it, I think it's irresponsible.
I would say you need to do something. If you have the opportunity to refinance, at the minimum, you should be at least reaching out to a bank and talking to a banker and see what you can do. There's just little numbers you can play with just to see what it'll save you.
Yeah.
In a percent, might be $10,000, $20,000, $30,000 over 30 years, and it's huge.
Well, if you live in a house and your house is appreciated and you want to stay there, certainly considering refinancing matters a lot. You can oftentimes roll in some of your other debt. Your vehicle, your credit card, some student loans, your boat, all those things can get bunched into your mortgage of your property. And if that mortgage is under 3% for your interest rate, that's cheap money. That's almost free money. And so if you want to have a lot more cash flow to your life, you should talk with Patrick at American Federal. How can they get in touch with you?
Call, email, our website, AmericanFederalBank.com.
Perfect.
You go on there, you can go apply right now for a mortgage. You select your banker. You can go find my pretty face, select me, and you'll pull up mortgage application and get sent straight to me.
I love it.
Phone number on there. Give me a call. I love having the conversations. Even, they call in, should I refinance? I like having that conversation. Where are you at? What's the balance? What's the rate? Let me run some numbers for you. Give you a scenario. Here's what we're looking at. It's not an application. Doesn't have to waste too much time, but
perfect.
Let's just see if it's something you can do.
Yeah, conversations should be had with Patrick Stadum over at AmericanFederalBank.com. So thanks for being with us. Folks, we're going to go to break and take a look over at HatchRealty.com and see those beautiful houses calling you home. This is Real Estate Radio with Erik Hatch.